Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 21st of November 2020 and we're publishing our gold and silver weekly update for the week ending the 20th of November. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week. Gold fell $19 last week from $1,890 to $1,871, having hit a high of $1,899 and a low of $1,853, a fall of 1%. And it's interesting to note that this week's high and low were lower than last week's. We shall keep an eye on this. In sterling terms, gold finished the week at £1,408. That's down £24 or 1.6%. And in euros, it closed at €1,578. That's down €19 or 1.2%. Silver fell 51 cents from $24.70 to $24.19, having hit a high of $25.08 and a low of $23.67, a fall of 2%. In sterling terms, silver closed at £18.20, down 51 pence or 2.8%. And in euros, it closed at €20.40. That's down €0.47 or 2.3%. The gold to silver ratio rose from 76.5 to 1 to 77.3 to 1. Bitcoin is up another $2,300 this week at $18,605. We produced a video on this subject yesterday, which frankly hasn't got a great amount of attention, which is interesting as it tends to compete for funds with gold and silver, and also heralds a question whether investors may look to Bitcoin rather than gold as a hedge against currency devaluation. On balance, we think not, but there are many who do think that way, and are moving their funds and clients' funds in that direction. This is not a subject that should be completely ignored within the investing community, not because we recommend it, but it will challenge some of the conventional thinking of safe haven assets or alternative currencies. And we've placed a link to yesterday's video in the description box below. The Dow Jones closed on Friday at 29,263, down 219 points on the day and down 216 points on the week, though this is following the previous week's rise in excess of 1,100 points. The S&P 500 closed at 3,557, down some 24 points on the day and down 28 points on the week, and the Nasdaq Composite closed at 11,854, down 49 points on the day, but up 25 points on the week. So whilst equities vacillated quite a bit early on in the week, they managed to come close to or little changed by the end of the week. Brent crude closed at $44.96, up $2.18, following the previous week's rise of $3.33. And WTI crude closed at $42.42, up $2.29, again following a previous week's rise of $2.99. So we are seeing some firmness in oil markets, but much of this is certainly down to dollar weakness, though not all of it, as the OPEC and OPEC Plus cartel continues with its actions. OPEC undoubtedly would like to see oil closer to $50 than $40, and is doing what it can to get there. The dollar index stands at 92.39, that's down 0.36 on the week. Our conclusion last week stated, quote, "So next week we see our gold outlier levels resting between $1,800 to $2,000, with $1,900 being the average level for the week, and silver operating between $23 to $27, with $28 and $22 as outliers." We have to admit that for many, this trading range, which has now lasted many weeks, is becoming quite boring for investors, and we've noticed quite a fall-off of interest because of little movement. This is not surprising, but once again, all of the fundamentals for higher precious metal prices are in place. It's just the timing is a little more into the future than many would like. As we look at the gold chart for last week, we can see that gold rose initially on Monday, dipped and then recovered, but from Wednesday onwards found it difficult to hold ground. That said, we should not forget that the difference between the high and low for the week is just $46, or 2.5%. We've seen larger swings than this in a day in recent weeks. There is no doubt that Pfizer announcing a vaccine and Moderna also announcing that it too has a vaccine with in excess of 95% effectiveness in tests, and both potentially being rolled out this year, has certainly caused investors to consider moving out a little, or at least not buying any more, of precious metals as a safety net. With coronavirus infections and deaths rising around the world and reaching potentially record levels in the United States, one would have expected a move towards gold, in particular, with shutdowns now beginning again. However, with talks resuming at the congressional level, there is a remote prospect that this could act as a small tailwind behind gold and silver, should a stimulus package be announced, so as to at least stopping a further decline in the price or possibly boosting it a little. With JP Morgan also forecasting that US growth will contract in Q1 of 2021, it will be interesting to see if other economists and banks predict similarly and what effect this will have on the gold price. From a technical point of view, resistance lies at 1,875 and support at 1,850. Our favourite support level these past weeks, of course, with $1,800 lying strongly underneath and 1,900 above, with 2,000 as an outlier. Short-term momentum is negative and medium-term momentum is neutral towards negative. And the fast stochastic and MACD between them suggest a degree of consolidation with a possible marginal upward bias. Should gold for any reason dip to $1,800, then we would expect some pretty decent buying at that level. Silver more or less followed gold's trend up initially and then fell back, recovered and then descended from Wednesday. The difference between its high and low was $1.41, or nearly 6%, twice that of gold's high to low ratio for the week. We would expect this, of course, as the prospect of further business closures and close downs will undoubtedly have an effect on the industrial demand for silver, or at least the perceived industrial demand. So we should not be surprised if silver underperforms short term. But as the economy picks up again, then we will expect it to outperform gold on a percentage basis. We noticed that silver gained buyers when it fell below $24, and there are various support levels all the way down to $20, with strong support lying 25 cents or so below the $23 level, in other words at $22.75. Equally, there are a number of resistance levels all the way up to $30. On Thursday, we produced our midweek financial update, where we revealed that retail sales for October came in at 0.3%, compared with 1.6% in September. Import price index was minus 0.1% compared with plus 0.2%, and household debt for Q3 was 0.6% compared with the previous quarter of minus 0.2%. The Thursday jobless claims of 1.06 million compares with 1.02 million the previous week, and suggests a potential worsening of the unemployment position. And we shall see this week if that trend continues. Though, admittedly, existing home sales were positive for October, showing 6.85 million versus 6.57 million in September. Now, the data last week, to be fair, was relatively scant and non-market determinable. This coming week could have a slightly greater impact. So let's take a look. On Monday, we have the market manufacturing PMI preliminary for November, and its services PMI preliminary, also for November. On Tuesday, we have the Consumer Confidence Index for November. And on Wednesday, we have a plethora of economic data, including the weekly jobless claims report, GDP revision for quarter 3, durable goods orders, core capital goods orders, advanced report on trading goods, new home sales, personal income, consumer spending, and core inflation, all for October, and the Consumer Sentiment Index, the final, for November. Thursday, of course, is Thanksgiving Day holiday, so nothing will be announced then. And on Friday, there's nothing at this moment scheduled. So Monday, and particularly Wednesday, are the 2 days to watch. So where does this leave us for next week? Well, the dollar remains subdued somewhat, and we're still awaiting the ultimate outcome of the presidential election. The coronavirus figures are still worsening around the world, with over 201,000 cases yesterday in the US alone, and nearly 2,000 deaths. So once again, we're calling that gold and silver will be somewhat range-bound, with gold hovering between 1,800 and 1,900, with a sort of 1,750 to 1,950 outlier, and silver $23 to $26 with a $22 to $27 outlier. We suspect, though, that gold will pivot around this 1,850 to 1,900 level and silver around $24. Admittedly, this is not particularly exciting, but there did appear to be encouraging movement in a stimulus package being agreed through Congress. But it was announced late yesterday that US Treasury Secretary Steven Mnuchin decided to defund several Federal Reserve coronavirus lending programs on December the 31st, which creates a degree of uncertainty over what will happen in this particular area. We shall just have to wait and see. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. Finally, we wish you a safe, enjoyable weekend, a prosperous week ahead, and if you get chance, pop over to our Richard and Greg channel, where we update, usually with 2 and sometimes 3 videos a week. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.